Hey everyone! Today we're going to learn about a legend, the big bull of Dalal Street, Rakesh Jhunjhunwala. He started with just 5,000 rupees and built a business worth billions. This man, my friends, he wasn't just lucky. He had a gift for understanding the market. He knew a lot about businesses, and he was great at picking the right stocks at the right time. He was a risk taker, a visionary, and most importantly, he truly believed in India's potential. In this video, we're going to uncover the secrets to his success. We'll break down his top 10 financial strategies, the strategies that took him from a regular accountant to a stock market giant. Get ready, because this is going to be exciting. Rakesh Jhunjhunwala always said, "Buy right, sit tight." He was a master of value investing, finding undervalued stocks with strong fundamentals. Take Titan Company, for example. He saw its potential when it was just a small watch company. He invested early, and Titan became a huge success for him. But it's not just about finding cheap stocks, it's about understanding the true value of a business. Rakesh Jhunjhunwala emphasized the importance of research, understanding the business inside and out before investing. He believed in companies with strong leaders, a good track record, and a clear plan for the future. He would carefully examine financial statements, analyze industry trends, and meet with company management. When he found a company he believed in, he went all in, taking big bets and going against popular opinion. Because he knew that in the long run, value would always win. Rakesh Jhunjhunwala had a knack for spotting growth. He understood that to create massive wealth, you needed to invest in sectors with high growth potential. Take the pharmaceutical industry, for example. He saw huge growth potential driven by factors like an aging population. He invested heavily in companies like Crisil and Aurobindo Pharma, which gave him amazing returns. But it wasn't just about picking the right sector, it was about identifying companies within that sector with the potential to become market leaders. Rakesh Jhunjhunwala was drawn to companies with innovative products, a strong competitive edge, and a large potential customer base. He believed that these companies, with their ability to grow rapidly, were key to generating outsized returns. And he wasn't afraid to pay a premium for quality. Investing in high-growth companies was like buying a ticket to a rocket ship, and he was ready for the ride. Rakesh Jhunjhunwala was not a trader. He was an investor. He believed in the power of compounding, letting his investments grow over the long term. He often said, "The name of the game is to buy low, sell high, but it's harder than it sounds." He wasn't fazed by short-term market fluctuations. He knew that the stock market was like a roller coaster with its ups and downs, but he also knew that over the long term, the market always went up. He had immense patience and conviction in his investments. Take Titan, for example. He held on to his shares for over 2 decades, riding out market crashes. Why? Because he believed in the company's long-term potential. He knew that time was the friend of a good business, and he was proven right. His patience paid off handsomely. He believed that by holding on to your investments for the long haul, you could overcome the volatility and benefit from the power of compounding. Investing was a marathon, not a sprint, and he was in it for the long haul. Rakesh Jhunjhunwala wasn't afraid to put all his eggs in one basket. He believed in concentrating his portfolio in a few high-conviction bets. He felt that by owning a small number of stocks, he could track them more closely and make better investment decisions. His portfolio was a testament to this philosophy. He had significant holdings in companies like Titan, Aurobindo Pharma, and Tata Motors. He believed that by concentrating his investments in a few carefully selected companies, he could achieve superior returns. He wasn't afraid to go against the conventional wisdom of diversification. He argued that if you did your research and had conviction in your investments, then concentration was the key to wealth creation. Of course, this strategy came with its own set of risks, but Rakesh Jhunjhunwala was a calculated risk taker, understanding the risks involved and being comfortable with them. His concentrated portfolio strategy played a pivotal role in his phenomenal success. Rakesh Jhunjhunwala always emphasized the importance of understanding how a company made money before investing in it. He believed that if you didn't understand how a company made money, you shouldn't be investing in it. He would often spend hours, days, even weeks researching a company before buying its stock. Take Tata Motors, for example. He was a big believer in the company's long-term prospects. He understood the cyclical nature of the auto industry and knew that Tata Motors was well-positioned to benefit from the eventual upturn. He had done his homework, visiting factories, meeting management, and studying financials. He believed that investing without understanding the business was like driving a car with your eyes closed. It was a recipe for disaster. He often said, "The market is full of fools. Don't be one of them." He believed that the only way to succeed in the stock market was to invest in businesses you understood and believed in, and he practiced what he preached. Rakesh Jhunjhunwala was a contrarian investor. He wasn't afraid to go against the crowd and invest in companies that others were shunning. He believed that some of the best investment opportunities were found when the market was overly pessimistic. He had the courage to buy when everyone else was selling and sell when everyone else was buying. He wasn't swayed by market sentiment or short-term noise. One of the best examples of his contrarian approach is his investment in A2Z Maintenance. When he invested in the company, it was an unknown entity, operating in the unglamorous business of facility management. But Rakesh Jhunjhunwala saw something that others didn't. He saw a company with a sound business model, a strong management team, and a huge untapped market. He went against the grain and invested heavily in the company. And as usual, his conviction paid off. A2Z Maintenance turned out to be a huge success for him. He believed that the crowd was often wrong and had the courage to go against the tide. Rakesh Jhunjhunwala had an uncanny ability to identify market trends and cycles. He understood the market moved in cycles and used this knowledge to his advantage. He knew when to ride the wave and when to get out before it crashed. He was always on the lookout for emerging trends. Take the aviation industry, for example. He predicted the growth of the sector in India and invested heavily in jet airways. He understood that as the Indian economy grew, so would the demand for air travel. He was right, of course. Jet Airways became one of the leading airlines in India, and his investment multiplied many times over. But he also knew when to get out. He exited Jet Airways at the right time, just before the airline industry went through a downturn. He understood that market cycles were like the tides, constantly ebbing and flowing. He believed that to be successful in the market, you needed to understand these cycles and position yourself accordingly. He said, "The market is like a pendulum. It swings from one extreme to the other." He knew how to ride the pendulum and profit from its swings. Rakesh Jhunjhunwala was a big believer in managing risk. He knew investing came with risks and took steps to mitigate them. He maintained a diversified portfolio. Patience was key in his strategy. He held investments for years, even decades. Take Tata Motors, for example. He invested early and waited. His patience was rewarded when the stock price skyrocketed. In the stock market, the patient earn the returns that the impatient deserve. Rakesh Jhunjhunwala was known for his high-conviction bets. When he believed in a company, he wasn't afraid to back it up with his own money. He put his money where his mouth was, and this conviction was reflected in the size of his investments. He didn't just dip his toes in the water, he jumped in with both feet. One of the best examples of his high-conviction approach is his investment in Titan Company. He believed in the company's long-term prospects and wasn't afraid to bet big on it. He accumulated a massive stake in the company, becoming one of its largest shareholders. His conviction was based on his deep understanding of the business and his belief in the growth potential of the Indian consumer market. He didn't let market noise or short-term fluctuations shake his belief in the company. His conviction was eventually rewarded when Titan became one of the most valuable companies in India. Rakesh Jhunjhunwala was not afraid to admit his mistakes. He knew that everyone makes mistakes, especially in the stock market, and he believed that the key was to learn from them and move on. He didn't dwell on his losses, but instead used them as learning opportunities. He analyzed his mistakes, figured out what went wrong, and used that knowledge to make better investment decisions in the future. One such mistake was his investment in Indiabulls Real Estate. He invested in the company during the real estate boom, but the investment turned sour when the market crashed. Rakesh Jhunjhunwala lost a significant amount of money on this investment, but he didn't let this setback define him. He accepted his mistake, learned from it, and moved on. He realized that he had gotten caught up in the hype and had not done his due diligence properly. He vowed to be more careful in the future and to stick to his investment principles. So there you have it, friends. The 10 Commandments of Investing, straight from the big bull himself. Rakesh Jhunjhunwala's journey teaches us that success in the stock market is not about luck. It's about having a deep understanding of businesses, a long-term vision, and the courage to stick to your convictions. Remember, investing is a marathon, not a sprint. Be patient, be disciplined, and never stop learning. The stock market is a vast ocean of opportunities. Go out there, do your research, and find your own multi-baggers. As Rakesh Jhunjhunwala always said, chase your dreams, but take your brain with you. Happy investing!